Hi guys, quick update here for YouTube on the S&P technical analysis as well as a bit of Bitcoin and some altcoins before we start for those asking. So we have three sort of products here which we're offering. So there's the masterclass, which is the 50 module or near 50 module educational course which was developed over 6 months, but it's got years and years of knowledge going back 12, 13 years, because you really need to know everything. You can't just know Elliott wave and Fibonacci, and you can't just understand price action. There's a whole host of knowledge and experience which needs to be developed for one to really understand how these markets operate. So we cover the four main areas which I deem as necessary to understand where this market is going to go from a day time frame, swing time frame, and a longer time frame. That's Elliott wave, Fibonacci, volume, price action, as well as auction market theory. Towards the bottom, you've got futures as well as options. In the secret Facebook group, what we do here is we do 45-minute to 1 hour videos Mondays and Thursdays around about 6-7 a.m. Eastern time. They get released. Usually it gets uploaded. That's through the Facebook page. The only reason we're using Facebook is because their servers are very good, and I will also update on my own positions as well as quick updates as and when needed. That's the secret Facebook group. And the last thing is the amortization course, which I believe is $29, and literally we're discussing amortized loans, quicker ways to pay off your mortgage, and essentially you get access to this sheet. So for many people might be the best $30 that you've ever spent. This is a completely customizable spreadsheet for anyone looking to either remortgage or to obtain a mortgage. So these are all completely dynamic cells which we have here, so you can just change anything really. We've got a hypothetical example here, so let's just get that onto $450,000 property. You're going to drop 150k, that's the interest rate, that's customizable, that's the start date, and it automatically calculates your monthly payment, the total interest, and everything else. Okay, and it's also customizable by fixed rate as well as variable rate. Okay, so in a rising interest rate environment, it might be quite useful to some people. Anyway, those are the three products which we sort of offer here. Now, my initial impression of what's going on is that we're dealing with a short squeeze. The market isn't as of yet open. I think there is still the potential of a big move down here before the end of the year. We have highlighted on multiple videos that until the S&P gets down into this level, 24 to 2700, we can't really be happy with the state of this market and really enter from a more longer term passive sort of approach. To me, it's an A and it's a B, and we're now working on the C. Okay, this looks way too nasty, way too vertical, and way too impulsive for it to be anything else. No doubt, one can count a complete 5-wave sequence. We know the C wave has to have 5 waves, so it could literally be just as simple as this: a 1, 2, 3, 4, 5. That gets you 2 areas of interest, 2700 and 2400. The good thing about 2400 is that it repairs everything on the ES that I've been speaking about for 6 months. The ES needs to get down to 2350, 2400. There's a lot of damage on the ES here. You can't see it on the cash, but you can see it on the futures. Those who have taken the masterclass and who understand volume profile, the VWAPs, the day types, the inventory positioning, the naked VPOCs, the gaps, the poor highs and the poor lows. These are very, very important. Okay, even from a long-term perspective, we've known all along, certainly I have, the minute this market turned, that number one, it's a secular bear market. Number two, you can't really touch this SPY from a long-term investment, hoping it's going to turn into something magical to the upside until the ES gets down there. So it could just be as simple as that. The alternate count is slightly more bearish in that that's a 1, that's a 2, then a 3, 4, 5. Okay, there is literally nothing different between a 1, 2, 3, 4, 5 and an ABC, up to the point of the third leg, okay? They are literally the same thing in terms of Elliott wave, right? And you really don't know whether you're dealing with an ABC or a 1, 2, 3 until you get the development out of here. Obviously, if we bounce here 2700 and we V-bottom and we rally up higher back towards 3K again, then it's just an ABC. If it's a 1, 2, 3, 4, 5, it'll flag for a 4, one more panic down to, let's say, 2400, maybe even 2300, get very close to the pandemic lows. I mean, ideally, you run the pandemic lows. That's an obvious sort of buy right there, isn't it? Let's be honest. So that's the only difference, because that's 535, that's 535. So there's no difference, okay? Regardless of 1, 2, 3 or ABC, both of which suggest what is going on currently is a US midterm bull trap. And some people would argue, those who are inclined to believe the world's going to end in a 1, 2, 3, 4, 5, because obviously if it's a 1, 2, 3, 4, 5, now, I can't make the 666 call. I mean, 10 years ago, well, I've known from 10 years ago this market was going to get near 40k down, but my long-term thesis going back 5 years ago was that these lows were going to get challenged. I'm not making that call, and I haven't made that call since January, because this is inflationary and not deflationary. If it was a deflationary crash, we would already be sub 3k now comfortably. But the worst case scenario is an ABC. Now, we have done worst case scenarios here, which suggests 1260. I don't think any of this is really relevant right now. We're not dealing with any of that. Right now, I'm not off the 1, 2, 3, 4, 5. I'm off the simple ABC opinion. And I think this kind of waterfall fall here, I mean, that is such a big bull trap. That's going to be a vertical move there. Good time to short. There's very much the possibility this could be the worst year ever for the S&P. Okay, the worst year ever prior to this was this 38% decline. Year on year 38.4%. So for this to be the worst year ever, it has to close the year below 2900. And let's be honest, after the US midterms, even sooner, frankly, it could easily do that. So that's the only way to drive out every 60-40 passive investor, because they'll be running for the exits come January the 4th. That's probably when this market is going to bottom. The S&P does like to do V-bottom reversals. It waterfalls down like it did here, 2008, 1987, waterfall down, vertical, then it does this. Okay, so this is completely consistent. What you're seeing there, that's completely consistent with how the S&P would move. So that's my current take on the S&P. It's a bull trap, and we're going to go lower. A very good short is presenting itself. The alternate counts slightly, although it's really much the same. Although, given the way this has moved, you can't really call that a 1, 2, 1, 2, another 1, 2. The minute we take this out, obviously that invalidates that. So you'd rather call that all of that 1 than a 2. Okay, so very, very basic fibs. This could go as high as, I've done targets here where this gets to around 3,820. So sideways to up over the next, let's say, 3 to 4 weeks, past the US midterm, maybe hit the 50% fib around about 3,789, 3,800. I doubt it gets as high as 4,000, and then we have the vertical move down. That's probably the way this is going to end. The alternate count, which we've had on the table for a while, the problem with this count is that it's invalidated the minute this happened yesterday, because wave 5 has to be longer than the wave 3, so it can't be an expanding diagonal. And I've never really liked how out of proportion this wave 4 is compared to here. Too much time was taken. I don't like that. I would have liked this wave 4 to have been slightly more compressed. Then I would have gone alongside the ending diagonal. So the only way to count it is that was the A, that was the B. The other alternate count is it's some part of WXY. Then we have one like this and just do WXYs. Number 1, everyone's got that count. Number 2, it's inconsistent with how the S&P moves. Okay, And great time for anyone who wants to join the group, because we're covering a whole host of coins here, many of which you could argue have actually bottomed, or they're very close to bottoming. What we're going to do today is just cover Bitcoin. So let me just take all that off. So from the top here, we've said this market is not a long-term investment at all. When I was at 50k, probably going to settle 8 to 12k. If the S&P rallies here in some kind of fake short squeeze between the US midterms, the most bullish interpretation I have is some kind of ABC, or some kind of triangle, which basically extends this wave 4 out a little bit, right? I think it's very risky playing this move because it could fall back at any time, okay? The higher this Bitcoin goes, the more people are going to go broke, okay? If they're not broke already, all right? That is a clear invalidation point, which makes me think it might actually run this high at 22k, form an S-curve pattern, and then end up coming back down again. So this is still very, very hard to buy, given the fact I'm saying S&P before the end of the year could still go to well below 3k, 2700. Given how correlated everything is, it's very hard to say Bitcoin can go much higher than 22, 23k. That would be the only bullish count I have, is some kind of ABC, and this little wave 4, we're just dragging it out. The alternate would be an ABCDE diagonal, something like this, and then we come down, right? Either way, the target is still there. It's 14.3k to 15k. Okay, that is the exact target where this has to pass. Obviously, by definition, the target after that is 12.6k, and we get that. We highlighted that 6 months ago. For this market to get to 12.6k, obviously it has to get through this target first. So I need to see the response at this level. If the response at this level is feeble and there's no real volume coming in, and I'm not seeing a proper impulse followed by a wave 2 pullback, shallow, and I'm not seeing anything like this, then clearly the next target would be 12.6k. Even with the S&P moving to 2700, my target is still 14.3 to 15k, but you have to be dynamic. It depends how bad the S&P get. If the S&P rolls over towards, let's say, 2400, perhaps we will see 12.6k. So as of right now, that's my second target. By definition, we can't even get to this target before we get this first, right? The altcoins are very, very close. I don't need Bitcoin 12.6k to see ADA get to its target. Now, we're not going to go through these coins. You'll have to join the group for that. That still looks like a descending triangle. There was a chance of a shakeout pattern here, possibly as a trade, but the fact that it's run this level now, it's showing weaknesses, back testing the area, then clearly that's a symmetrical triangle. Well, that's a descending triangle, isn't it? So you have to start the impulse from there. So that was the descending triangle. Add this vertical distance onto basically the breakout zone, and that gets you basically 20 to 25 cents. So that's the problem with 12.6 Bitcoin. We don't need 12.6 Bitcoin for our targets to get hit on, Tank Engine Coin, Solgado. We need 20 to 25 cents. So if you're interested in joining the group, this is what we do. We cover all of this twice a week, as well as regular updates, and we're adding more and more coins to the list. They're all very close. There's some argument to be made. One could dollar cost average in now. The problem with that is, as the market opened, so it's been open a minute, is that these rallies are not to be trusted. It's very hard to trust any of these rallies. That to me is a short squeeze. Anyone who's taken the masterclass, who understands what the session profile in this one looks like, well, put it this way, is definitely a short squeeze. A short squeeze isn't necessarily designed to strengthen the market. And if anything, some people would argue, and I'm on this level of thought as well, that it actually weakens the market, because people are buying to cover. They're not buying to open. They're buying to close. So any rally here between now and the US midterms is going to get faded, probably. and then we're going to have the moon down, the move down. I know JPM Diamond's calling for 20%. See, that's not nearly low enough. That's not low enough at all. That's only 3k. So I have a feeling this is going to get a lot worse before it gets better. No doubt next year is going to be a very good year, I think, for the stock market, because obviously the market has to recover, otherwise people would leg it and never come back again. So they can't do that, right? They have to make sure everyone who's made money here the last 13 years by passive investing, by the time we get to the year 2030, and it is very much possible, you could buy the S&P here, go to Mars for 8 years, and the S&P would be at the exact same price, right? I do have that alternative where we just stay here range bound, and I mentioned that before on many videos. You could literally buy the S&P here, 8 years later you could sell it at the exact same price. The only way to get people out of this market is to keep them in, but shake them out along the way, okay? Time is you've got to tire them out, then you've got to shake them out, then you've got to tire them out again. So sometimes time can be quite difficult for certain investors to handle, and that's enough to get them out of this market. But the market can't just continue going down and down and down. The market has to reverse eventually, but my feeling is this year is a total write-off. 2023 January, we could be in for some very nice gains, potentially to all-time new highs. Now, is anything else worth covering here? I don't think so. I mean, there's a couple of UK stocks for those who are interested. And this is very much a stock picker's market here. Like, you've got to really know what you're doing, which most people don't probably. They just invest passively. You've got to really be able to find these bargains here. And there is an argument to buy dividend stocks in this kind of environment. But dividends only make sense when the stock is at an all-time low, like Direct Line over here. That is a 7 to 10% dividend. Next payable in April, I think it is, and the ex-div is in March. So, there's definitely opportunity here locally as well, not just in the US stock market. There's probably very similar things going on in the German market, French market too. So there's definitely opportunity here locally. One just has to be more diverse and whilst maintaining high dollar cash position, because still the S&P drives a lot of this panic. But there's definitely bargains there, much more than just in the commodity sector in the US. Now, finally, so it's very hard to really trust any of these rallies. I mean, it's I mean, you could read all of that, as we've been saying, that's just the one, or the A, 1, 2, 3, some kind of contracted diagonal. That was the very disgusting rally there. And now, we could be in for some real pain here. Yes, this is a big part of how the market moves, is how Apple moves. And, you could also read 5 waves into that. 1, 2, 3, 4, 5. So quite possibly Apple's just doing another wave too. Maybe it'll retest 150. I believe they have earnings. Perhaps it's the last week of October, perhaps, just before the US. Well, last week, I mean, I don't know actually. When are their earnings? Yeah, it's the last. Wow, okay, fine. I'm not sure how accurate that is. I'll have to double check that with earningswhisper.com. But that looks like a pre-earnings pump. And if that's just the one off the two, you can see easily why, a lot of people here, what they're doing, really want nothing to do with this market. You have to ask yourself, in what year will you see a new high? Right? I don't think Apple makes a new high now before the year 2030. Maybe that's a bit too bearish, although it's probably true, let's be honest. I would say 99% sure of that. But let's just say 2025. These are long-term tops. So these big stocks, they can only go sideways and down. There's nowhere else to go. Meta, I mean, I was joking this was going to go to 83. Just like I was joking that the UK 10-year yield was going to go to 10%. I'm amazed at how these stocks are moving here. We called 83 when it was here, and I never thought that it would happen like this. It's trying to do something, but really hard to really believe in this market. I was looking for some kind of A, B, and then C, but if it's just a straight waterfall collapse, honestly, there's nothing on Meta. if the S&P rolls over, that is, until 83, there's actually nothing on, this looks like a ridiculous chart. And after 83, well, it's what happened on the IPO then. There's honestly nothing on Meta. It's a very bad looking stock, and a lot of these stocks look very, very bad. We covered Disney. I mean, this is definitely going to 50. It might take a while to get down there. So we have some real problems here. These are long-term tops. And the problem that we have is major cycles have been completed since 1970. And you could argue, rightfully, since 1929. So that is really the problem that we're having. That's why none of these stocks at time of doing video are good investments, because they have a lot lower to go. We are not just correcting the last 2 years or the last 13 years. In the case of Disney, we are literally correcting 50 years of price movement. So your opinion on what is cheap has to change. In this kind of market, you can't really pay 25 price over earnings. I don't think. S&P P over E is going to go to less than 10. We know that's going to happen. Right now, we are trading at 16 to 19. So you can see why no one wants anything to do with this market from the long side, which means all of these stocks, you have to completely reevaluate what you deem as cheap. 25 is all right. Maybe 20 in a bull market. In a bear market like this, an inflationary bear market, honestly, that's going to go to 50. And obviously Tesla, we just continue to downgrade Tesla. I'm at 0 now on Tesla, actually. It's very concerning that people have any count other than this. That's highly concerning. Anyone who's taken the masterclass, I would be disappointed if your count isn't anything other than Tesla going to exactly 66. That is 100% probability, followed by 16, followed by 0. Guaranteed, this will be the biggest loss ever for any individual other than Mark Zuckerberg. It has to be the biggest loss ever to go from the richest guy in the world to homeless. Tesla could easily be privatized before the year 2030. This is exactly like Yahoo. There's nothing different between Tesla and Yahoo from 2000. Those who understand patterns and cycles, they get it. They understand why those are the three targets. It has to be a 5 million year top. My last downgrade was a 10 trillion year top up there. How can it be possible for the 5 to be there? I mean, I could be wrong, so all due respect to anyone who's got that count, I don't think that's going on. To me, that's a devastating head and shoulders there. And, this is the problem. You can't really buy anything safely right now. And obviously, that's a risk asset. So, I think Tesla goes to 0 effectively. By that, I mean, it won't be in the stock exchange by 2030. It'll just be like Yahoo. It'll probably be privatized. They were the first, but they're not going to be the last. I consider all of that a diagonal A, and this the B. And if that was the high, so that's the B leg there. That's just the one. That's the one of the two are now vertical collapse. So this is the problem. We have major problems here. Some of these stocks, for all intents and purposes, there's some people out here who will never ever live long enough to see any of these stocks make a new high. Some of them will, and that's where the genius comes in. And some are good buys. It's very much a stock picker's market here for the next 10 years. If you can't read a chart, you're going to have a lot of problems. Anyway, I'm going to wrap it up there. Be careful what you guys do. If you want to join the group, have a look, and got various courses there too.